And for more on this, we're now being joined by Madan Sabnawis, Chief Economist at the Bank of Baroda, who's live with us from Mumbai. And Mr. Sabnawis, thank you very much for talking to us this evening. What does the narrow margin of victory for the Narendra Modi government or the new government mean for India's growth trajectory?
In terms of sentiment, we already saw yesterday that the market did go down significantly. In fact, when I say the stock market went down, currency depreciated, bond yields went up. But there's been a significant correction which has taken place today. So in fact, if I look at the Sensex today, it's probably at a level higher than what it ended on Friday. That is before the exit poll scheme. So I think we're back to normalcy in terms of the market. The rupee has also gained strength and the bond yields have also come down. Now, this said, I think the particular coalition which you're talking of is unlikely to really dent the pace of growth in the economy because the economy has been doing very well and has been supported by reforms which, to my mind, are something which will be acceptable even to the two major coalition partners which are being spoken of right now. So if we're looking in terms of the thrust to be given to industry, the thrust to be given to infrastructure, or for overall digitization of the economy, I think these have been pet projects even of the coalition partners in the past when they were ruling their states. So I don't see any inherent contradiction in terms of the basic economic policies. There could, of course, be certain differences when it comes to certain kind of social welfare expenditures. But we have seen that even the present government has been open to opening the purse when it comes to social welfare as and when it's required. So while I think there would be a lot of apprehension in terms of the market until the budget is announced, because that would be a document which will give a clearer indication of where the government stands. But to my mind, I think we are in the right direction, and this may not really make much of a difference.
Right. So essentially, you're saying that the new government will be able to push through tough reforms going forward.
Yes, the reforms which are required to keep the growth ticking is something which will be done. But here I would like to add that there are certain reforms which have been pending in the last 10 years relating to land, labor, as well as agriculture. Those have been pending and they will probably still be pending. It would require wider discussion to get the acceptance, not just of the coalition partners, but also of the stakeholders. But those are really major reforms which haven't really moved significantly, even in the last two regimes of the government.
I see. And what is your take on the government's fiscal discipline plan, Mr. Sabnawis?
Of the fiscal deficit, I think the government is committed to moving towards this glide path of 4.5% of fiscal deficit by 25-26. And there's little reason for one to suspect that this particular target will not be met. And what we have seen is that it's a gradual movement which is taking place, which has been aided a lot by the inherent buoyancy in the Indian economy. So we have seen tax revenues being very, very buoyant. Non-tax revenue in terms of the RBI transfer of surplus has been a big plus for the government this year. This combined with the way in which expenditure has been managed, both in terms of capital expenditure as well as social welfare, will ensure that we are well on this particular path of attaining the 4.5% fiscal deficit mark by 25-26.
Mr. Madan Sabnawis, the Chief Economist at the Bank of Baroda, appreciate you joining us with your thoughts this evening. For all the latest news, download the WION app and subscribe to our YouTube channel.